the things that we noticed, and this is something, a chart that that I've presented in many of my seminars back in 05, 06 out in California. I started coming to California in 04 to do my presentations because of the fact that I saw the bubble coming, and I told my friends and the people who attended the seminars out there when they had 17% appreciation in one quarter. I said, this is crazy. Everybody knows it's crazy. It's going to bust. And about 5,000 people should have moved their equity somewhere else, but they didn't. But 500 of them did, so I'm very blessed with that. I appreciate the fact that 500 people bought homes, and some of them bought multiple homes from me, which about 85% of my investors still own those homes. And that says a lot, that they know that they're into it for the long haul. This is not a short haul. And if you do still own your homes, and if you're even on this webinar and you're one of my clients, maybe we'll also help you get hooked up with prime lending and get that thing refinanced down on the 4 or 4 1/4, because the refinance, you can either pull cash out or just hold on to it for the long haul and get those payments down. And now with the rents going up, it's an incredible opportunity. But what you'll see here is, going back to the 1980s, we have counter cycles that have been the difference between California and Texas, and it has a lot to do with migration. When things are booming in Texas, they're kind of in the doldrums in California, and this is what's happened right now. But if back in the 80s it happened, in the 90s it happened, the 2000s it happened. The only thing that happened in the 2000s was we had a hyper run up. If you take a look at the chart here, in Texas, we had an oil boom that drove, and a real estate boom that drove prices up, and that came crashing down. And was it, Rick, you were around 85?
It was 85, Kevin.
1985 is when the world came crashing. It was probably worse than it is, way worse than it was now. I mean, I remember.
It was vacant city back then.
Yeah, they basically, I remember looking, I was living in Anchorage, Alaska at the time. I remember looking at the statistics that 50% of the commercial real estate was empty in Austin, Texas. I said, what's wrong with that town? But they overbuilt, and it's not nearly as, and Austin was not nearly affected on this last go around. And there's a good reason for it, and I'll tell you. But then California had a huge run up into the early 90s. And that's when I started looking around in Orange County, and the qualifying rate, how many people could actually qualify for a home, the affordability factor was down to 8% in that early 90s. And what that led to, in other words, only 8% of the people, 9% of the people could afford a medium price home. I said, this is trouble. There's only 9% of the people can afford a medium price home. And my business is in real estate, and my business is in lending at the time. I said, I got to go find another place in the nation, number one, to invest. I didn't want to invest in a market that I knew was going to go down. I was studying these cycles. They go back into the 70s, these cycles. And so sure enough, I started investing my money out here in Austin. And sure enough, between 1998 to 1997, Daniel, how do I get back?
Hit the left key.
All right. From 1990 to 1997, we had in California one of the largest drops in values, and the worst foreclosure rate was actually 97, 98 in California. Well, in the meantime, we had in Texas, we had a tech boom going on, led by Dell Computers and among others, and that led all the way up into 2000 time frame. And what happened in 2000 was Dell and the whole dot-com thing came crumbling down. And so what happened is the values ended up going, well, we didn't have a crash. We call a soft bust. And in other words, the values pretty much flattened out. Some of the high-end stuff got hit pretty hard, and just as it did in the last go around. So, Daniel, here's a question here. Loss of sound, is it being recorded?
I still have sound.
Okay. It is being recorded. We do have sound. Let me go ahead and so you still have sound, Daniel? Okay.
Yeah.
All right. So if you guys can't hear, just let me know. There might be something. The internet's fun stuff. So, okay, sound is back. Great. All right. Let me get out of this little guy here. All right. So going back to the chart here, where we saw that in California, when the dot-com bust hit, guess where all that money went? It went out of the stock market. Guess where it went? All that dot-com money went into real estate. So the investment of the stock market, they took all their money and started putting it in California. Well, that led to a feeding frenzy. Started off slow in the early 2000s, but then just started going and going and going. Well, in the meantime, the administrations allowed for and didn't keep an eye on what was going on in the lending market, which is really driven by, believe it or not, Wall Street. They were driving up the with all the way they had structured the whole mortgage industry, allowing anybody to borrow money. Well, that led to even more investing and more speculation, which drove to a higher appreciation. And in California, it drove it to the 2 years past what would have been a normal cycle correction. Not only did it drive 2 years past, but it also drove it up farther than it ever should have gone in the short term. It wasn't following normal. It was hyperinflation. In Texas, we had an opposite. We really were kind of coming out of that doldrum from the .com, and we did have a boom, but we had a more boom in volume than we had a boom in values. In other words, we had 16,000 homes constructed in 2005, 2006 time frame. When the whole market, the mortgage market, collapsed, Austin pretty much for the last 4 or 5 years just remained stable, and part of it was because we didn't have the big run up. Well, we know what happened in California and other parts of the nation, Florida, Arizona, where there was just over speculation. We had an incredible crash. So, but the point being here is that now a lot of these folks that are living in these other areas that are so devastated by the economy, they're looking for jobs, and that's where we come in. Austin has the #1 job growth in the nation, and that's why people are moving here. Let me prove my points here.